Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. In today's video, we're going to be looking at the biggest, the best, and the cleverest Forex trade ever made. But before we look at the actual details, I just want to give you some background as to ways of making money using other people's money. For instance, let's say you want to buy a property of $100,000. You get a loan from the bank of $100,000. You rush out and you buy your property in a property boom. The value increases to $120,000 in the next couple of months, and you are so happy about that. You go ahead and sell that property and you repay the bank their $100,000, and you have made $20,000. That $20,000 has been made using other people's money, not even your own money. So that is just a complete clear profit, and that's the way to invest. Use other people's money, make a huge profit. Now, I'm not saying there's no risks involved. Yeah, obviously the house value could have gone down and all kinds of things, but still this is the financial principle that applies. Now, if we look at Forex trading, what are we doing as Forex traders? When we buy the Euro USD, what we are doing is we are buying the Euro and using the USD to fund the transaction. So should the Euro go up in value as it is now, so the Euro's gone up in value, and our funding stays the same. So what we then do is we sell that transaction back. We've bought it before, now we sell it. So we sell it, but now we don't need so many USDs because the value has gone up. So we only need 45 USDs to buy 120 euros to cancel the deal out, and then we end up with a profit. So that's what actually happens when we trading Forex as retail traders. Now, there is another method, and this is a combination of the two ways of making money. Is what you can do is you can actually go to the bank and get a loan, and you get a loan in the currency that you're in. And let's say I'm staying in the UK, so I would get a 200 pound loan. I would then rush out into the street and I would buy US dollars, and I would get, let's say the exchange rate is 2, I would get 400 US dollars in my pocket. So then I'll sit cozy and wait for a while, and then the exchange rate changes to 1.5 pounds per US dollar. So what I then do is I rush out, I go and buy the pound because it's gone so cheap. I then buy 200 pounds, and it only cost me $300 because of the change of the exchange rate. I then rush off to the bank, pay them back, and therefore I have $100 in my pocket, which I've made from the bank's money. I haven't used any of my own money, I've used the bank's money. So if you understand those financial principles about using other people's money and how profit is made in the financial markets, let's just move on and have a look at the pound USD history. Now, I'm going back to 1976 thanks to this fantastic website that is available that goes back all that way. And you can see the pound has had a rough ride in its life. It's really had some really big drops. Look at this drop from almost 2.5 to less than 2.25. It's a 50% drop in value in one go. So there's been a few other ones. There's one, and recently you can see the pound is devalued quite a lot over there. And the one that I want to focus on in this video is this little section here that happened in 1992. It's called the Black Wednesday. I think it was September the 16th. The pound devalued tremendously. You can see this huge drop. Now it looks like a huge drop here, but if you look at all the other drops that's happened subsequently, it isn't. But what is important here, this is the background to the greatest Forex deal ever done. And you know, if we looked at, and this is a enlargement of that little section there, and you look at it from a technical analysis point of view, you can see beautiful double top, you can see a trend line violation, all those things that was setting up for a great deal. Okay, so what happened on that day? And George Soros is the culprit in this case. What he did is he was studying the economies of the UK and the economy of Germany and a few economies around Germany, and he was just saying that the UK was artificially propping their currency exchange rate up, using all kinds of financial means to try and artificially prop it up, compared to its neighbors like Germany, who had a thriving economy and had a really solid exchange rate. So he saw that this was just a time bomb waiting to explode. He knew that the pound was overvalued tremendously and the Deutsche Mark was undervalued compared to the pound, and he then took advantage of that situation. Now you can read more about it in the links that I'm providing here, and there's another one that's pretty good, the Black Wednesday link, and here's the link down here. Now the point here is that George Soros was so convinced of this imbalance and that something was going to happen that him and a lot of other financial people started shorting the pound tremendously. But what he did is he borrowed extremely heavily to bet on the drop of the pound. So he actually went to lots of banks and raised literally billion-dollar loans to finance the shorting of the pound. And that is why I explained earlier the relationship between using other people's money. He used other people's money in this particular deal. Now, I can read more about it on the links that I'm providing on these slides. Here's another link that's quite interesting. You can go and read about that as you go on. But essentially what he did was he went to some private banks and raised a couple of loans, and I'm talking billions. He then rushed off and took the pounds. He borrowed in pounds. So he borrowed in pounds and he rushed off and he bought the Deutsche Mark and even the franc that was pretty strong at that time. So from a forex trading point of view, he sold the pound and bought the Deutsche Mark. What then happened, and this happened very quickly because the UK government made an announcement that they're going to de-link the pound from other currencies, and by doing that, the pound would be valued on its own merits. And because they were in a weak economy, the pound just plummeted down, and literally from an exchange rate of 2, it went to 1.5. So it dropped 25% of its value, as we saw earlier in the chart, which meant that George Soros could now sell his Deutsche Mark investments and pay the banks that loaned him the money, the billions of dollars, back. And he was then left with the surplus of that whole deal, which in this case, in this example that I used earlier, wasn't $100, it was over $1 billion. Now this particular trade is fantastic because it was clever. It was based on fundamentals. It had a very low risk, and it was done using other people's money. So what can we learn from this? Firstly, for us as retail forex traders, we must realize that technical analysis has its limitations and that we should not ignore fundamental information that's going on. You know, if pound is losing value, that is the trend, and if it's based on sound fundamentals, then we have to acknowledge that type of thing. The other thing is the forex market can be very risky. When this happened, the pound literally dropped 25% in less than 3 days. So it was a traumatic experience, and I think anybody who has also been involved in the franc delinking from the euro has also experienced an incredibly quick, fast drop in the currency, and sometimes the drop is so fast that it'll run through your stop and your stops will not be acknowledged by the broker. So Forex market is very tricky. You've got to know what's going on and which currencies are the risky currencies. But the other positive is that due to broker leverage, you can make a lot of money using other people's money. Now, I hope this video is giving you some food for thought and that you find it very interesting. Obviously, we're not in a position to go off and borrow a few $1 billion of currency from a bank to do these kind of deals, but it is always nice to look at how these deals were done, what the thinking was behind them, and so on. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Aploy, cheerio.